is Ella Shetel, and this is my Ghost Year project for Accounting 2140. I am here at the Walgreens in Burbank. Walgreens is known as one of America's largest pharmacy-led retailers with over 8,000 stores across all 50 states. And Walgreens' basic purpose is to be America's first-choice pharmacy, well-being, and beauty store. Walgreens is a public corporation who in 2014 merged with Boots pharmacy chain and then pharmaceutical distributor Alliance Healthcare. That made them form the Walgreens Boots Alliance. And I chose Walgreens because I thought it would be interesting to examine their accounting procedures and policies because they are one of America's largest retail drugstores, and also I work at Walgreens. Walgreens inventory is accounted for using the periodic inventory system. They separate their store into two departments, retail and pharmacy. Since Walgreens uses the periodic inventory system to account for their merchandise, somebody from corporate comes and they actually have to count each individual item within the retail end of the store, and then they also have to count each medicine within the pharmacy. And they do this separately because in their annual reports, the pharmacy is accounted for differently and separately than what the retail end is accounted for. So even though Walgreens only accounts for their inventory once a year, the employees actually do frequent checks on the inventory and the merchandise within the store. They use what is called a tells-on system, and they go through and they actually scan the items of the barcodes on the items, and by doing so it'll show them how much of the merchandise they have on hand, and that way they can measure if what they're having on hand is equal to the inventory counts that they have annually. In Walgreens' 2018 annual report, Walgreens actually states that their cost of goods sold includes the purchase of the price of the goods, the cost of the services rendered, the store and warehouse loss, manufacturing costs, as well as supplier rebates and allowances. And the value of their inventory in total was over $8 million, and for total assets it was over $67 million. Walgreens uses what is known as the FIFO method when valuing their inventory. This means that the first goods that are put on the shelf are the first ones to be sold. And since they use this method to value their inventory, it actually means that their cost of goods sold at the end of the year is lower than if they were to use different accounting methods such as the LIFO or the weighted average. Internal control systems are used to monitor a business's activities as well as to protect their assets, ensure reliable accounting, also to promote efficient operations and uphold the company's policies. An example of Walgreens' internal control systems is that they have metal detectors in the front and then they have cameras throughout the store that monitor the people that are walking in. This is a way to keep their inventory secure. Another example of internal control systems that Walgreens uses is that they put security tags and lockboxes on high-priced items as a mean to reduce the amount of theft that occurs throughout the store. Walgreens employees are also trained on how to properly identify theft and how to respond